Hey everyone, welcome back to the channel. My name is Adam. I'm an expert mortgage broker, and today I'm talking to you about how soon you can remortgage to soften the blow that 2022 is having on all of our finances. So if you want to find out, stick around, let's go. So if you enjoyed today's video, please do give us a like and subscribe to the channel. There's new videos coming all the time, from buying your first home to remortgaging, so there'll be something useful in there for you. So subscribe to the channel and you won't miss the next one. Okay, so far then, this is the year that is seeing us emerging from coronavirus and things. Hopefully, we're doing well with that side of things, aren't we? But then along comes this massive hike in the cost of living, the cost of materials, inflation. Everything is getting more and more expensive all the time. Now, I can't help you with your gas and electric. Martin Lewis is your man for those sorts of things. However, I do know all about mortgages, and I can tell you how to save as much as possible on your mortgage. So, when it comes to your mortgage, you've got a couple of options. Normally, we wait until the end of your current rate, your fixed rate normally. So we wait until the end of your fixed rate before we then look to find a new one. And we normally line a new one up a month or two before, so that you don't spend any time on that variable rate that your lender has. But nowadays, there's a couple of other options. So, if you want to stay with the same lender, that's called a product transfer. And you can do that just by choosing a new rate with the same lender. This is suitable for anyone that doesn't want to borrow any more or any less either, doesn't want to change the term or make any other changes to the mortgage. If your mortgage is just staying exactly the same, that a product transfer could well be the answer for you. Now, there's no questions asked about income, so if you've recently gone self-employed or your earnings have gone down or any of those kind of things, there's no questions asked, so you can just choose a new rate as long as your mortgage is up to date. So that's a good thing with a product transfer. But as I said a minute ago, you can't make any other changes, so that's not ideal a lot of the time. You also may well not get the best rate if you do a product transfer. So if you just stay with the same lender, they've already got you. So most lenders don't have the very, very best rates for existing customers. And so many things in life, you don't get much for loyalty these days, so you tend to get a better rate as a new customer somewhere else. But a product transfer is an option for you. Now, you can do that 3 months early. So 3 months before your current rate finishes, you can choose a new rate with the same lender. So 3 months is okay, but that's not that long. There is another option though, and that is a 6-month option. If you move lenders, there are some lenders, not all, but there are some lenders, good high street lenders, that have a 6-month offer window. So that means we can do an application with a new lender now, and you don't need to complete on that new mortgage for 6 months. So if your mortgage is coming up later on in the year, in, well, around 6 months' time, you can choose your new mortgage rate now. We can do your application, you can get it locked in, that's the rate that you've got, and then it doesn't need to complete until 6 months' time. So as long as your current rate finishes within 6 months, you've already got your new rate now. So that means that you're going to benefit if rates go up, and it doesn't matter what happens to interest rates between now and completion, you've got your rate fixed now. So you're going to be in a really, really good position if rates start to go up and up and up later this year, which they may do, I don't know. Haven't got my crystal ball on me today, so they may have plateaued. That may be all we'll see now. But there has been quite a lot of rate increases lately from various different lenders. Once one of them starts to do it, then they all sort of chip in with rate increases. So it's hard to keep track of who's doing what at the moment. So we have seen quite a lot of rate increases this year. We may see more, we may not, but the risk is, if you leave your mortgage as it is and don't do anything with it, when you start to look for a new deal, it's going to be higher than it could be now. So if you're due within 6 months, you can change your mortgage now and fix yourself in for a better rate than you might get in 6 months' time if interest rates continue to go up. Now, changing lenders comes with some other advantages as well. As I've already said and talked about before, you tend to get a better deal as a new customer. So if we go to a new lender, you'll probably, not with every high street lender, there are some exceptions, but you'll probably get a better deal as a new customer with a new lender than you would do staying with your existing lender. We've just said the massive thing is 6 months early, but there's some other advantages as well. So if you want to borrow any more on your mortgage, that's the big one. A lot of people want to borrow extra on their mortgage, and that might be a little bit for some decorating, or you know, some people have a little credit card or something like that they want to pay off. That's debt consolidation. I've talked about that in a previous video. We need to be a little bit careful with that one, but it's an option if you've got loans, credit cards and things that you want to pay off with your mortgage. You can do that. That's an option for you. The big one is home improvements. A lot of people at the moment, instead of moving, staying where they are and doing some home improvements. So, you know, you might want to do some decorating, carpets, curtains, kitchens, bathrooms, all that sort of stuff, extensions maybe. There's all manner of things that you can do. If you're improving your home, then you can add it on to your mortgage, and that is perfectly fine to do that. So there's another couple of reasons there why it might be best to move lenders. So the big one though, I'm going to say it again because it's a big one, 6 months early. So you can tie in your new mortgage deal now, and it doesn't have to complete for 6 months. So it doesn't matter what interest rates do between now and 6 months time, your mortgage rate is fixed as of now. Now, I've had a couple of people recently also come to us who aren't due to end their fixed rate anytime soon, and are actually thinking, well, if my mortgage isn't due till next year or the year after, could I fix it now just in case rates go up again? And the answer is yes, you can, of course you can. It's hard to do that with the same lender, so again we'd normally need to move lenders, and you're going to have a penalty on your existing mortgage. So you're normally going to have to pay a penalty to come away from your existing fixed rate to go to a new one. But if you are happy that that is worth the risk, then we can do that for you. So you can go to a new lender and remortgage, take a new fixed rate now, and tie in for however long you want. You know, the 2 years, 3 years, 5 years is a popular one. The 10 years as well, 10-year fixed rates, although the rates do go up a little bit for those. But you can tie yourself into a new fixed rate now, even if you haven't finished your current fixed rate. And we are seeing more and more people do that, but you have that penalty on your existing mortgage rate from your existing lender. So depends how much that is and how much this new stability is worth to you, as to whether that's going to be sensible. Only you can decide. You know, we or any other mortgage broker, we can give you the figures and we can say what we think you should do, you know, what makes sense on paper, but ultimately if you want to do it, you can. If you don't want to do it, then that's fine. If you want to explore that, by the way, you can get in touch with us anytime. You know, we don't mind spending a little bit of time with anyone talking about what your mortgage could be and what your penalty could be, and then you can decide what you want to do. And if it's something you want to pursue, you can. If not, then fine, no hard feelings. We'll see you at some point in the future. So there's an option there as well if you're not reaching the end of your fixed rate, but you're worried that interest rates may go up. Now, they may not, but they may go up. You know, we're seeing everything else go up, aren't we? Gas, electric, you know, the gas and electric bills are, you know, crazy now, and lots of people are struggling with those. But the one thing I can talk to you about and help you with is making sure that you make the most of these rates now before they go up anymore. Okay, so if you are coming to the end of your fixed rate, or you know it's later on this year and you want to start lining it up now, or even if you're partway through your fixed rate and you want to have a look at what your options are, or how much you can borrow if you want to borrow some more for those home improvements or anything like that, then please do drop a comment, or there's a link to our website in the description below, and on there you can book an appointment straight in our diary, and we'll go through all of that with you. There's no charge for an initial appointment. So make use of that. I will see you on the next video. Hope that's been useful. Take care. See you soon.